Greetings, everybody. I hope that you are good this afternoon. So, today I just wanted to share with you guys something very, very important, and it's actually an observation more than anything, right? And it relates to the way in which the markets have been moving over the last 2 to 5 years, and especially on the lower time frames, such as the 15-minute chart, the 30-minute chart, as well as the 5-minute chart. And that is that the markets have been very, very choppy over the last couple of years, and I've been asking myself as to why the markets have been choppy. Yes, we do know about the current economic situations, we know about the geopolitical tensions. I mean, we have the wars that are taking place at this point in time, but nonetheless, the markets shouldn't be this choppy, and especially on the lower time frames. A couple of weeks ago, I actually had a conversation with someone who was asking me if there still are those traders who catch M&W formations on the M15 charts, right? And on both the London and the New York sessions, right? And I said to the person that that's actually a very, very good question, and that yes, there are traders who do catch those moves, but I've also realized that those moves are not as plenty as they used to be, right? And I've been asking myself as to why. I mean, the markets have changed, guys. I mean, look at it. Look at today, right? This is the 12th of October, as you guys can see, and we had the Asian session at this point. The market went up, and yes, it seems to be forming an M structure at this point. And I know that a lot of people sold at this point, but I think that it's still very much risky to be selling at that point. And that is because if you look at yesterday, in fact, if you zoom out a bit, you will see that yesterday created a very weird W structure, right? So in my humble opinion, to pay attention to the smaller M structure over here, I don't think it's a good idea, because as I say, we have this W structure, as you guys can see, and the anticipation is for the market to push further up, close above this neckline of the W structure, push further down to just that neckline of the W structure, and then potentially push further up, right? Yeah, so as I was saying, guys, we do have people who catch those M&W formations at the highs and lows of the day, and on both the London and the New York sessions, right? But nonetheless, guys, I've also been asking myself as to why is it that we're not catching these moves as often as we did in the past, right? And it hit me. One thing that hit me is that yes, we do have the ongoing tensions in as far as the wars and the economic situations, right? But another thing that came to mind is that if you actually think about it, if you look at the traders that we have today compared to, let's say, 15 years ago or 10 years ago, today traders are more sophisticated than they were 10 to 15 years ago, right? And the reason why this is the case is because if you look at the materials that we have right now, they were not as easily accessible 10 to 15 years ago, right? So what does this mean? This means that because of this readily available information that's at our fingertips, it means that we're now making the very same trades, more or less. We all know about M&W formations, we all know about necklines, we know about trend lines, we know about everything. Even someone who started trading 3 months ago, I think, is sophisticated compared to someone who had started trading in the same period but 10 years ago. So we're very much sophisticated, and that's why I think we're now seeing the markets moving in a very unusual way, right? And that is because those who control the markets have realized that in order for them to keep making money, they need to cause confusion within the markets. That's just my opinion. That's just how I feel about it, because it just does not make any sense for the markets to be moving in such a strange manner. I mean, look at it, guys. Look at yesterday, for example, which is the 11th of October. Look at the day, right? We saw the Asian session at that point opening, right? Price immediately went downwards, right? And London opened as well. But look at this point, look at this point, look at this point, look at this point. There's no proper structure. The market is just moving, right? Creating M's and W's everywhere, and there's no proper structure. So for me, yesterday it would not have made sense to be buying or selling, because the market is just so choppy, right? I mean, look at it, guys. We have this W structure, yes, but The second leg of the W structure came in very, very late, and I don't normally trade at this time of the day or night, and that is because I know that that's when those who control the markets set their traps, right? So I saw this second leg of this W structure, and I was tempted to actually at this point make a buy, but I decided to leave, right? And then London opened. During London, we saw the market going up, but we never really got to see an M structure or a W structure during London. New York opened, as you guys can see, and still it was a weird market in my humble opinion, because there really aren't any proper indicators of an entry if you look at the way in which this particular day flowed, right? Let's look at the previous day, which is the 7th of October, right, which was last Friday if I'm not mistaken, right? Yes, this particular day I didn't really expect much, because we had NFP and we saw the market push further down from that level, right? I didn't expect much on this day, because whenever we have major economic news, the markets are tricky, so that's normal, that I understand, right? But look at the previous day, which is Thursday, the 6th of October, right? Look, just have a look, guys. There we go. We have the Asian session. London opened, but look at this point. What's happening right here, right? Can you guys see that? So it's just been tricky. It's just been tricky in regards to making any buying or selling decisions, right? So what is the solution, guys? What is the solution, right? Because this is a problem, but we now need a solution, right? And I've come to realize that the solution in regards to surviving these days or becoming a very, very profitable trader is that one needs to focus more on psychology than on technical analysis. That's solution number one. Number two is that we should not be trading every single day. This I know is very obvious, but we should not be trading every single day. We should be extremely selective in as far as placing our trades goes, because if things continue to go the way in which they are going, a lot of us are going to end up blowing our accounts, right? And that's not good, right? So just going back to the psychological aspects of trading, we need to be more sophisticated in as far as psychology goes, right? And to those of you who don't really know where to start, I would say start with Mark Douglas. He was a trader, but towards the end of his life, he more focused on the psychological aspects of trading, and he was a trainer as well, right? So he's got a lot of books. I think he's got 2 books or so available that you can buy. I think one is called Trading in the Zone. The other book is called The Disciplined Trader. So in conclusion, guys, as I've said, it doesn't look as if the markets are going to change anytime soon in as far as the day-to-day movements go, right? So the solution is being a sophisticated trader in as far as psychology goes, right? Focus more on the psychological aspects of trading than on technical analysis. That is what I think is the solution to this whole dilemma, right? That's just my opinion. If you need further input in as far as where to go, just let me know and I'll point you to the correct sources. Otherwise, peace out.